Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, February 18th. Really no change in the market, guys. I know you hear new highs, new highs. I want to show you a 10-minute chart of the SPDRs, SPY, the ETF tracking for the S&P. What do you see here? I mean, a jump down, move to highs. They break them down again. They break them out of this range. We get a half-hour move, and we pull back just ever so slightly, thinking that we're going to break out, and sure enough, we collapse again, and then we collapse further, and then at the end of the day, they pop them higher again, and some of the indices ticking higher, making new all-time highs again. Absolutely crazy stuff. The volatility is ridiculous as far as not good volatility, right? We love volatility. We want the markets to go up and down, but when the markets just really are sitting at the upper end of the range, and you get into a long trade, for example, and then just to get stopped out the next candle and then resume its trend, it's nerve-wracking. So what you do is you stay out and you wait, you be patient until the markets begin to vacate the area. And what I mean by that is, that we want price to start breaking out and making new highs. Now, I don't mean a top tick at the end of the day, then we make new highs, and then it chops around all day, and then the top tick again, making new highs. That's not what we're looking for. We're looking for some more volume. We're looking for some conviction to the long side. We're not getting that at the moment. Therefore, let's wait and sit back and wait for the best possible trade scenario that you can come up with for the day. So let's go look at the charts. You're going to see no real change. We did break out. Now we're getting a little bit stretched here. You can see we broke below this downtrend line. And look, if you closed your eyes and you put a stop below here and held them, which we do not hold stocks here, I don't recommend it anyway. Not at these lofty levels. And even if the market went to 2,200, I am still not comfortable holding stocks. I'd rather look for proper entries and exits and be done by the end of the day. To do something, you never know what could happen in the overnight. Still have the Ukraine issue. That ceasefire debacle is exactly what it is. It fell apart. Then you have Greece now in the forefront again, and they have a deal, they're not having a deal, they're coming to the table. Markets are all over the place, and it's just not an environment to be holding. Obviously, longer-term investors, you're fine. You're going to weather the storm, and so be it. But to swing trade this market, I think right now is a little bit crazy. Anyway, we're at these levels, and what do I mean by vacating the premises? Well, we're at $210. We're looking for, we did get a hit of 2,100 in the S&P cash. I'm looking for ES to hit 2,100 as well. If we could break above that 2,100 and hold it for a couple of days, not just one day, but on a closing basis, then I think that we have something that we can get new order flow, meaning new money coming in and pushing this market again higher. Next target would be 2130, 2150 zone. Okay, now, if in fact we pull back, and a pullback does happen sometimes, that we get into a correction, then that's also very good too as well, because we'd be selling rallies. So let's just keep this in mind, guys. I mean, we are a little bit stretched here, and I've seen this many times when the markets just kind of chop around and then make new highs, chop around and then make new highs, pull back, get everybody short, and then put and squeeze at the end of the day. That's not what we're looking for. We're looking for some consistent movement, okay? And that's what we're going to be seeing, hopefully, in the next coming days. Now, we have FOMC minutes that are coming out today, so I expect, again, another boring session until at least the FOMC minutes come out. I don't think anything's going to happen. They wouldn't rattle the markets now. We do have bonds, though, that are really starting, the yield's starting to tick. I think 10-year was at 2.12%, and bonds really have gotten crushed yesterday. So, again, that may fuel more buying into equities, pushing equities, again, into the stratosphere. So, be careful shorting here. We don't want to be looking to short the market until we get a full-fledged signal. And if that's the case, we'll have plenty of time to short the market. All right, so let's look at the transports, the IYT ETF. Again, our leader lagging, all right, lagging than the other indices. But again, start looking to possibly break higher. Let's see what happens. We're at the upper end of this range. It is resistance for now until it breaks out. So if this starts to break out and really has some momentum to the upside, it will definitely take other indices with it. Now, XLF doing okay now. Right now, with the yield rising, it's going to be good for the banks. So let's see if we take out this little area here, these last 2-day highs. If we could take that out today and start to really move, then the next area we would target this interim high here back in December. Okay. Here's the weekly chart looking fantastic. I want to see that breakout, though. If we can coincide with some good breakouts on weekly charts as well, then I think really all bets are off to the downside. Right now, it is a little iffy. I do think we go higher first before we go lower, but let's just see what happens. Let's play it day by day. Here's the IWM Russell 2000. We have now broken out for the new week here. Last week we broke out, and we're staying above this range, which is now support, okay? So let's keep an eye on this. This is important. So we have another couple days before the week closes, but if we can stay back above it and start to move higher, Russell is one of our leaders here. Take a look at the Russell daily chart, looking fantastic. Again, making new all-time highs here, okay? But look what's happening, very, very low volume. A lot of the volume is, though, has dried up again in the normal equity markets, but being traded heavily in a dark pool. So you really can't even look at volume that much, although it's a big factor to me. I still think that it does count. Diamonds, again, one of the laggards, but look at how well it's doing. It's starting to move up higher and probably will take out the new and make new highs today, okay? But one more I want to show you is the Qs. As you can see, Qs exploded out of this range, alleviated downside pressure by making lower lows and lower highs, now breaking out to the upside. So I think a pullback will be bought. Technology looking really good. Banks and financials looking really good. And bonds are breaking down. When bonds start to break down, guys, money's got to go somewhere. Can it be hidden in the safe haven sectors, the REITs, the utilities, the consumer staples? Absolutely. Maybe some of the big pharma, sure, but it's going to go somewhere. The overflow is probably going to go into equities, and I would suspect we move higher before we move lower. Now, we can probably do for a little bit of a pullback, and I mean just a pullback. But sometimes pullbacks come into full-fledged correction. So let's keep an eye on what happens this week. I think this week could be a really important role for equities, okay? Have a great day, everybody, and we'll see you tomorrow. Take care.